Good evening. Hope everybody enjoyed their week. Welcome to the Goofy Investing YouTube channel where we talk about investing in the stock market. This video is going to be about Palantir and how I got adjusted cost basis down and how I feel about the valuation of Palantir. There's a lot of hype going on and there's a lot of attention on Palantir since the little up run to over $27, if you will. We'll talk about if this is sustainable. We'll talk about, once again, how I feel about the valuation. We'll compare some metrics and so forth. All right. So before we get started, before we could tell the whole story, let's pull up my position in Palantir. All right. This is my position in Palantir. I have some buy lots down here, but nothing too important. But overall, this is a view of the position. $7.65 a share. If you can see up here, cost basis, invested about $10,705.76, 1,400 shares that I hold. Okay. And I started buying this back in April of 2022. All right. And this stock was hovering in the 6 to 7s and below 8 ranges. All right. So we'll go back. Let me pull up something for you. These are the price target projections that I made years ago. All right. Well, in 2022. All right. And these price target projections shoot out to 2028. And they take into consider net income margin growth, shares outstanding, and a projected multiple that the stock would sell for. And a more of a 5-year out price target, if you will. Let me see, my thought process is I take 1 year to buy the actual equity, and then the fund of performance doesn't start until the next year. All right. Hence, while I'm going to 2023. All right. In terminal target rate of 2028. Sure, it's like, I guess technically 6 years, 5-6 years, but at any given time, you see the market will realize the actual future earnings value, or they will lag the future earnings value. Okay, there's a timetable that each stock goes through with a company. All right. And oftentimes the stock is disconnected from the actual company. Right. And as you can see, I mean, currently, if we go back up here, Palantir is trading at $27. This thing is over 3x. All right. Well, it's over doubled. So we're at 256% gain. But that doesn't tell this whole story. All right. I sold, let me see here. I sold covered calls for $5 a share with $30 strikes, okay, to expire January of 2026, okay? And when you do this maneuver, you make the stock yield, you make the equity yield without touching the intrinsic value of the stock, because the funds and the energy are coming from a third party, a contractual agreement, if you will. All right. So, and I'll let you in on a little secret. I sold covered. This isn't the first time I've sold covered calls against Palantir, and so my adjusted cost basis is even less. So, all right. I sold. Let me see. We'll pull up the calculator. If my cost basis is $7.65 a share according to the position, and I sold covered calls against the position for $5 a share, adjusted cost basis becomes $2.65. Okay. Now, Once again, I sold another position. I just couldn't pull up the receipt somewhere, but I guess you're just gonna have to trust that I did it. Why would I lie? All right. So I sold another position, but it was for less of a premium and less of a time frame. So, and I closed the position out. So I sold that for 90 cents a share at the time of closing it out. All right. So my real adjusted cost basis for my Palantir position is $1.75 a share. Okay. And once again, this is without touching the intrinsic value of the actual company. All right. So there's ways to make your investments yield. All right. Do I risk losing the shares? Yes. But I risk losing the shares at $30 a share. I have 1,400 shares. So let's real quick, we'll pull up the calculator once again. 1,400. If I were to get bought out in the contractual agreement of the covered call, I would, essentially, I would wake up one morning. They would have to buy me out at $30 a share. At 1,400 shares, that's $42,000 in cash. So if I woke up one morning and my shares were called away, you know, there would be 42 G's in my brokerage waiting to be deployed. And the covered call position on the hedge, that entry would be deleted out of my brokerage. Okay. And I guess those gains would be realized. All right. So, as a taxable event, if you will. Though those shares are long, though, keep in mind all those shares are long, so it would be taxed at a long-term capital gains rate. If the option closes out a year out, then those will be long-term capital gains rate. So, food for thought. All right. Now, going into valuation, okay? Why did I come up with $30 a strike? All right. I don't want to, and I want to be frank here. I don't want to sell my shares, but I had obligations that I had to fulfill, and I had to raise funds. So I sold calls against the position because the position has ran a lot. So I think, this might hurt some people's feelings, but I think Palantir's trading a little bit rich. Okay. Um, as the stock goes up in value, there's going to be more and more risk towards their performance. As you can see with my price target projections, we're right over here on the end range of my price target projections running out 5 years. So, needless to say, we're pricing in performance. We're pricing in decent performance for several years ahead of time, to where the actual company has to earn its intrinsic value up to its current valuation. All right. This tech SaaS multiples, these can command some high PEs. Palantir right now is currently the second most highest expensive tech SaaS multiple stock on the market. We are trailing CrowdStrike right now. In CrowdStrike's price to sales, we're looking at 28 sales on the trailing and a forward 23 sales on the forward. As averse to Palantir, we're trading at 25 on a trailing and a 22 forward. And keep in mind, when we look at the growth trajectory on Palantir for consensus estimates, we're going 20% and below going forward. As averse to CrowdStrike, we're looking from a growth metrics. Let me see here. We'll go earnings estimates. We're looking at 30 and below, but to maintain above 25%. Don't let anybody tell you different. In order for Palantir to justify this type of multiple, we need to be starting to shoot towards maybe a 35% growth, unless there's got to be some other energy within the financials to contribute towards the valuation. All right. But that's how I got to my $30 strikes. Do I think that this is sustainable? I think the Palantir can hold this valuation so long as the earnings come out good. And I think we hover around 25 to 27 for a while. Okay. It can solidify this new leg up going from 21 to 25 to 27 range on this, on these technicals, if they just continue to do earnings well and the market sentiment towards AI still becomes whole. Like, AI has the attention of the market. But that's pretty much all I got. If you're finding value, please subscribe, hit the thumbs up, hit that bell notification. I'd like to see more growth in subscribers. If you're getting value out of this, out of transparent, honest, non-biased, opinions or what have you, consider subscribing. I'm always assessing different stock equities, and I'm always listening to the people, as far as comments and DMs and so forth. But with that being said, thanks and have a good day.